everybody. Let's work together on a problem and connect to get some more work in on this new stuff. So this is should be similar to some of the homework you're seeing in your assignment for this week. So we have the following account balances as of January 1st. So we're looking here through, we have direct materials, work in process, finished goods, manufacturing overhead. During the month of January, all the following occurred. We have direct labor costs, direct materials, sales commissions, direct materials used in production, advertising costs, factory supervisors earned, supervisor salaries earned, indirect labor costs, monthly depreciation on factory equipment, utilities expense, equipment with manufacturing costs that were transferred to finished goods, monthly insurance costs for the factory, $5,000 in property taxes, and equipment with manufacturing costs of $1,089,000. So again, when you're approaching these problems, think about where stuff fits. When I'm looking at, say, number 5, advertising cost, is that a product cost or a period cost? Period cost. If I'm looking at monthly depreciation of factory equipment, what is that going to fit into? Production cost. Monthly insurance costs for the factory, where does that fit? Production costs. $5,000 in property taxes on the factory, product cost. So a lot of this is going to be categorization questions. So if Ride and Row assigns manufacturing, let's look at the first part of our required portions here. If Ride and Row assigns manufacturing overhead of $84,400, what will the balances in the direct materials, work in process, and finished goods inventory accounts be at the end of January? So now we're looking for inventory. So we're looking for production costs to go into those 3 inventory types. As of January 31st, what will be the balance be in the manufacturing overhead account? So I know I'm looking for indirect costs, indirect production costs when I'm looking for that stuff. What was Ride and Row's operating income for January? So I know I'm going to need cost of goods sold to get there. Okay. So questions: direct materials inventory, work in process, finished goods, manufacturing overhead, and operating income. So I think the easiest thing to work you through this for now is just to do it in an Excel spreadsheet. So we're going to do that. So I'm going to set stuff up just kind of how I would do it if I were working through this process by myself. So if all else fails, I talk about this in class for online students. If you can't figure out where else to start at the beginning. So we're looking for direct materials inventory first. So this is as of January 1. So I go back and look at my fact pattern, and my direct materials inventory as of January 1st was $89,200. So I'm going to go ahead and stick that in there. Now, what else is going to go in my direct materials inventory? So I would have started with stuff already in that inventory. Anything else I purchase is going to go in there as well. So I need to go look and see how much in the way of direct materials purchases I had. So I'm going to look through my transactions because I know that these are what are going to apply. So direct labor costs, that's not what I'm looking for. Direct materials costing $335,750 and indirect materials costing $13,500 were purchased. Bingo. That's what I'm looking for. So $335,750 and direct materials were purchased. Now, anything I used up is going to be not be in inventory anymore. Okay, so I'm going to look for direct materials used. So again, these are kind of a puzzle. I have to think about what's going on. I'm putting materials into inventory. I'm using them up. Whatever I didn't use is going to be left over. So I'm looking through my transactions, direct labor, direct materials, sales commissions. Nope. $326,000 worth of direct materials were used in production. Yep, there we go, we need that. So again, you'll notice here I put less direct materials used. So just for clarification, I'm going to put parentheses so that you know that those are subtracted. Okay. So just to tidy things up here, we'll underline. So what we started with in our inventory, what we purchased, less what we used up, has to be what is in our ending inventory for direct materials, or as of January 31st at the end of the period. Okay, so that's how we go about doing that. Okay. So this is how I recommend you go through these problems. I think it's much easier to work it out first and then go back into Connect and put the amount in. And that way you see what you did. It's like showing your work. If you need to go back and correct something, it's a whole lot easier if you've put your work down and you don't have to try and remember, how did I get to that number? Okay. So our next part of the question. So we know our direct materials inventory. So now we're looking for work in process inventory for January, at the end of January. So again, if all else fails, so January 1st, all else fails, start at the beginning. I know I need to start at the beginning. And I see I have a work in process inventory as of January 31st. So my work in process as of January 31st, go back and look, 178,400. Now, oops, 178,400. Now remember, work in process, I'm looking to apply production costs that I'm incurring. Again, my production costs are 3 pieces. And you'll remember from your materials, we're looking for direct materials, direct labor, and overhead. Okay. So those costs get added in. So I go look back and look at my fact pattern, and I see my direct labor costs were $442,000. So I can fill that blank in. Now I need my direct materials costs. So I know what I purchased. So direct materials costing $335,750 and indirect materials costing $13,500 were purchased. So that went into my inventory of direct materials. But I need to find out how much I actually used up. So inventory and using it, because that's not going to be the same numbers. $326,000 worth of direct materials were used in production. So that tells me that's the production cost that I need to apply to my work in process. That's what I actually used up. Okay. Then overhead. I need to look through my transactions, advertising costs, faculty supervisors, indirect labor costs, monthly depreciation. Nope, nope, nope. Where's our overhead at? I need to look for assigned overhead. Oh, that's not in my transactions. It's an if Ride and Row assigns manufacturing overhead. So again, sometimes you have to hunt through these problems to find the information you need. You need to make sure you don't leave something out. So make sure you've analyzed the problem and gotten all the components that you need. Okay. So now I have 84,000, actually it's supposed to be 84,400 in overhead. Okay. So off to the side, I'm just going to make my life easier here and total these up. So I had $852,400 worth of production costs to apply. So if I add all those together, let's go ahead and tidy this up a bit. So I would title it something like costs assigned to work in production. Or work in process, sorry. So we would have had our beginning balance, oops, plus production costs we assigned during the period. Okay, so I had $1,030,800, okay, that I assigned to work in process over the period. So I'm looking for an ending work in process balance, work in process inventory balance. Anything that I transferred out would have gone to where? Finished goods. So therefore, I am no longer working on them. So I need to take out any finished goods that were transferred out. They would have been, those costs, associated costs, would have been transferred to the finished goods inventory. So I go back and look at my fact pattern, and I'm looking for any finished goods that were transferred. So I'm looking through my stuff here, direct material, nope, sales commissions, nope, direct materials used, factory, nope, indirect labor costs, monthly depreciation, utilities expense, equipment with manufacturing costs, of $970,100 were transferred to finished goods. So there is what those are the costs associated that I would have transferred to finished goods. So I'm going to go and again just show it's being subtracted, even though I said less finished goods transferred out, just to clean things up. Again, I'm subtracting those. Okay. So the difference between those two has to be what I have left over in my work in process inventory as of January 31st. Okay, so $60,700 is what I have left over there. That's the work in process I have to start the new period with next period. All right, so the last part of our Part A problem here is so we've done direct materials, let's go ahead and put our number in there. Work in process inventory at the end of the period, $60,700. So now I need finished goods inventory. So we're going to go through the same process. Again, start at the beginning. So January 1. I go look. As of January 1, my finished goods inventory was $253,600. Now, the other costs I'm going to incur in finished goods are any work in process goods that were transferred in. So I'm going to add those. I'm going to abbreviate there just to give some space. So cost of finished goods transferred in has to be, if they got transferred out of work in process, guess where they got transferred to? Finished goods. So if they got transferred out of work in process, that has to be the transferred goods to get added in here. Okay. So adding those two together gives me the cost of finished goods manufactured. Now, that doesn't tell me the whole story. I have to take into account things I don't have in my finished goods inventory anymore. What would not be in finished goods inventory? Hopefully you're saying to yourself, it is anything that I sold. If I sold it, I no longer have it in inventory. So I need to go look and find out if I have a cost of goods sold somewhere in here. So looking through my transactions, nope, 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 monthly insurance, nope. Equipment with manufacturing costs of $1,089,000 were sold for $1,550,000. So this tells me equipment with manufacturing costs of $1,089,000 has to be my cost of goods sold. Cost of goods sold. This is my selling price. That is my revenue for those goods. So that belongs in my income statement, but what I care about here is cost of goods sold, because that's what needs to come out of my inventory. So that was $1,089,000. Okay. So the difference between those two has to be what I have left over in my finished goods inventory. So we don't have to type that out again. So as of January 31st, my ending finished goods inventory is the difference between what I produced, what I finished up during the period, less what I sold. Okay? So hopefully that clarifies that part of the problem. So we're going to call that good for this particular video. Actually, let's go into Connect and go ahead and finish up entering in that number. And that was 134,700. Okay, so that's what it'll look like in Connect. So again, I highly recommend that you work this out either on paper or Excel or something, and then come back into Connect and put those totals in. And that way, when you make a submission and you get feedback you got them wrong, you can go back into what the work you actually did, and then when you ask me for help, it's going to be a whole lot easier if you can send me something like this. Show me what you did. And I'm going to be a really happy camper if you can do that. And that way we can pinpoint exactly what you didn't understand. Okay? So hopefully you find this helpful, and I will finish up this problem in a separate video. Thanks. Talk to you soon. Bye.